Hello, good people. Welcome to Thompson Capitals and the Forex Mentorship Program, FXMP. My name is David Thompson. I am the CEO and founder of Thompson Capital and the chief mentor with the Forex Mentorship Program. In this session, we are going to briefly discuss and break down and explain to you one of the most important tools that you would need to learn how to use in order to navigate the Forex and crypto markets efficiently and safely, first and foremost, and also high on the list, profitably. Okay, so we're going to dive straight into it. I'm going to share an article from my FXMP study manual. This is available on my Patreon for the FXMP Pro Trader tier. All right, still working on it, making a few tweaks and inclusions. You never stop learning in Forex, but it will be available for persons who would sign up for the FXMP Pro Trader tier of my Patreon on my Patreon page. Okay, so without further ado, we're going to be discussing Trendlines very briefly. So I'm going to read the article as we go through it together. Trendlines are among the most important tools used by technical analysts. Okay, so signing up with the FXMP gives you the ability to analyze the Forex and crypto markets from a technical point of view. All right. Signing up, I repeat, signing up with the FXMP gives you the ability to analyze the Forex and crypto markets from a technical point of view. All right, so you'll be learning to be a technical analyst. I continue. A trend line is drawn over pivot highs or under pivot lows to show the prevailing direction of price as shown in the diagrams below. All right, so we're going to get to the diagram shortly. Continuing. Trend lines are a visual representation of support and resistance in any time frame. Trend lines are a visual representation of support and resistance in any time frame. So when we get down to the charts, I'll dissect that particular sentence for you so that you can understand the actual representation of support and resistance. Continuing. They show direction and speed of price and also describe patterns during periods of contraction. Okay, so moving down to the diagrams now, and we show here in the diagrams the three different ways that the markets can trend. All right, so you can see the diagram labeled as D2 shows an uptrend, right? So you can see we have the line moving upwards. The orange line represents what will be the price action, all right? And the black line is the trend line. Okay, interesting to note that we have 3 touches on the trend line. This is significant. This validates a trend. Having price bounce off of the trend line 3 times, 2 times is good. It's okay, you know, you start to look at it, say maybe I might be having something happening here. But when you get that 3rd bounce, you know that you have a trend. Once you get a bounce and then you start to see the price action developing in the other direction, you know that, hey, this line is being respected, right? We read one of the sentences up here where it said trend lines are a visual representation of support and resistance in any time frame. And the uptrend, price coming down and bouncing on the trend line, this area would be the representation of support. All right, this is what we refer to as support or the floor. This is the low, this is a low area where price struggles to break below and it keeps bouncing off of that area. As you can see clearly here in the diagram, we have 1, 2, and 3 bounces off the trend line, also highlighted by the arrows pointing up. All right, so this is the uptrend. So we have the uptrend line, right? Pivot high, drawn over pivot highs, right? So these are higher highs that are being made, higher lows as well. Okay, higher highs and higher lows in the uptrend. The downtrend, which is labeled as diagram D3, is the inverse of the uptrend, meaning that price is falling down, pulling back up, and we can see the trend line moving down pivot lows in this scenario. Okay, the same as with the uptrend, 3 bounces on the trend line confirms that you have a trend going downwards, meaning that we are having lower prices being formed. Okay, so again, the orange lines represent the price action that would be the charts. We're going to take a brief look at the charts when I'm done with the diagrams here, and we can see price fell, went back up, bounced off the trend line, fell again, went back up, bouncing off the trend line, or as the visual representation would show, this would be resistance. So on the uptrend, we had price bouncing off of support. On the downtrend, price is bouncing off of resistance. All right, price is rejecting this level, this area here, and is struggling to break above that area. So it's resistance, it's finding resistance there. All right, and that's the ceiling, the current ceiling on the trend. The third type of trend that we can see in the markets is what we refer to, represented by diagram labeled D4. We have a channel, or what we will call consolidation, happening here. All right, this can also be referred to as a range. All right, so price is trading within this range. All right, maintaining highs within certain zones and lows also within certain zones. All right, that we have the support zone down here, where we have price going up, coming back down, bouncing off this level, going up again, coming back down, bouncing off support, again, going back up, bouncing off resistance. So we have a resistance and support within this area here. And depending on the range of it, the size of it, a lot of people find fortune trading in that area. Okay, so those are the diagrams. I hope you all are following what we have as the definition of trend lines thus far. I'm going to take a quick switch of the screen across to the charts so that I can share with you, for the sake of price action, understanding price action and how the candles move, the actual representation of what we just saw in the diagrams. Okay, so I use Ethereum USD here for this example. We can see the blue line represents the uptrend line. We can see price coming down here, bouncing off, making higher highs and higher lows, pushing all the way up, came back down, And this area where we have the second bounce is interesting. What I need you to understand is that trend lines are never always perfect. Sometimes we will have price breaking just below or above the trend line and then coming back up in the zone within the level above. Okay, as is the example here. You can see the wicks of these candles that it shows that the price broke just below the uptrend line, but we can see that it still eventually broke back up above the level and went up. Then it came down again here now for the third time. All right, this is Ethereum USD. This is the price around 3,900. This is where we had the last correction, and we can see it's currently moving back up. Right, this is a live chart. Okay, so this is what the price is at the moment for Ethereum. It's $4,652 per Ethereum at this moment, and this is the uptrend line. Okay, so I'm going to show you another chart which will represent the downtrend line. This is the Canadian dollar. This is the CAD JPY. So we can see here the blue line again in this example represents the downtrend line. We can see the trend started above here, price fell, went back up, rejected the level again as resistance, rejected the level again as resistance a second time, it fell, went up. You can see, just as I said before, it doesn't have to be perfect. It doesn't have to go all the way up and touch the line. All right, sometimes it may break a little above, sometimes it may stop a little below, but it's trading within a zone. All right, so after this correction back up to resistance, it fell again and back up, and we can follow the trend and see how the downtrend works. Right, and these are the areas above here where you'd be looking to sell. All right, but we're going to discuss that in another video. So I'm going to switch the screen again to give you that representation for the final diagram that we saw, which was the channels or the consolidation. And we're switching to the USD Japanese yen for this example. And as we saw in the diagram, and as I mentioned before, it doesn't have to be perfect. Look at this area here where price broke above, and we can see I labeled it as what we refer to as a fake out. Right? So there's a breakout, which is what happened over here eventually when price broke out of this channel. And then you have a fake out where price just breaks a little above or below structure and then falls back down within the channel or the range. Right? So we can see price went up here, made that fake out, came back down, went up, found resistance, fell, went up, found resistance, fell, found support, right? And you can see that we trading within this range right here, this area right here. And this is what we refer to as a channel or price consolidation. Okay, so guys, this is going to be where I wrap up this session. I hope you understood. You can always go over the video again, make notes, get some practice on your demo accounts, try identifying trend lines. This is one of the first steps that you're going to need to take. You need to be able to identify the trends before you start trading the markets. You can't trade the markets if you don't know which direction it is trading. This is why understanding trend lines is pivotal. So guys, thank you for your support, for getting involved with the FXMP. I hope that I continue to add value for you and that you can see your results improve and your life improve in a positive way. Thank you for your support. See you in the next video.